Now that we know the difference between errors that have an impact on the trial balance and errors that do not have an impact on the trial balance, and that we know how to prepare the suspense account, it is time for us to test our understanding by solving a practice sum. So we have a few transactions here that we have to correct using journal entries and suspense account. We are going to correct them one by one, and lastly we are going to prepare a suspense account in order to find out the deficiency of the trial balance. So let's move on with the first one. The first one says that we have purchased stock of $450 from Darius Hugh on credit. Purchase account is debited by $450 and Harris due account is credited by $450. It's pretty simple. We have purchased stock from Darius Hugh. So purchases account was supposed to be debited and Darius Hugh account was supposed to be credited. So we have made one correct entry, that is we have debited purchase account, but instead of crediting Darius Hugh, we have credited Harris due account by $450. So as you can see, we have recorded the transaction in the wrong person's account. This can be referred to as error of commission. As you know that error of commission is an error which occurs when a transaction has been entered into a wrong person's account. So we have two steps to make. First, we need to enter this transaction on the credit side of Darius Hugh, who is the actual person involved in this transaction. Second, we have to omit the wrong entry made in Harris dues account. So Harris due was credited by $450 by mistake. So in order to omit this credit entry, we have to do the exact opposite, which means we have to debit Harris due account by $450. So we have debited Harris due account by $450. So we have offset the mistake that we have made, and now we have to enter the credit entry in Darius Hugh's account by $450 because Darius Hugh is the person from whom we have purchased this stock. The narration is going to be purchase of goods entered in Harris due account instead of Darius Hugh, now corrected. In the next transaction, which took place on June 8, we took loan of $3,000 cash from J. Jarvis. J. Jarvis loan account is debited and cash account is credited by $3,000. Now notice carefully. We took loan of $3,000 from J. Jarvis. This means we have received cash of $3,000 from J. Jarvis. In this case, cash was supposed to be debited by $3,000, and since J. Jarvis is a liability for us as we have taken a loan from J. Jarvis was supposed to be credited by $3,000. But instead of crediting J. Jarvis loan account by $3,000, we have debited this account, and instead of debiting cash account, we have credited this account by $3,000. So we have reversed the correct entries and entered this transaction in the wrong side of both accounts. And this error is actually referred to as complete reversal of entries, which we have discussed about in the previous session. So in order to correct such an error, we need to enter the correct entries, which means that we need to enter this transaction on the correct side of both accounts, but with the double of the actual amount, which means we have $3,000 in this transaction, but the amount that we're going to use while entering the journal entries in order to correct this error is going to be double of $3,000, which is $6,000. So since we have taken loan of $3,000 cash from J. Jarvis, we have received cash. Cash account is debited by double of the actual amount, which is $6,000, and J. Jarvis account is going to be credited by $6,000 as well, since J. Jarvis is a liability for us. And I want to repeat this part where we use double of the actual amount. Let's take cash account for instance. We were supposed to debit cash account by $3,000, but instead of that, we have credited cash account by $3,000. So we already have $3,000 on the credit side of cash account. But now, while correcting this error, if we enter $3,000 on the debit side of cash account, this $3,000 will only offset the mistake that we have made, which is by entering $3,000 on the credit side. So both of them are going to balance, and there is no longer going to be any receipt or any balance in the cash account. But if we enter 6,000 on the debit side of cash account and divide it into two parts, which means it has two parts of $3,000 and $3,000, the first $3,000 is going to offset the mistake we have made on the credit side, and the rest is going to make sure that the transaction has been completely recorded on the debit side of the cash account, which is actually the correct side by the correct amount. And the narration for this error is going to be loan by cash from J Jarvis debited to J Jarvis account and credited to cash account is now corrected. Moving on to the next one, where discount allowed account had been undercast by $712. So discount allowed account has been undervalued. It's very easy. We need to understand which classification discount allowed account falls under. Discount allowed is basically an expense. It's a revenue expenditure. So all expense accounts are debit accounts. So in order to correct this error, we need to increase the value of discount allowed account, because discount allowed account was undercast by 712, which means we need to increase the value by 712 in order to correct this error. So we need to increase the value of discount allowed account, which is an expense account, which means it is a debit account. In order to increase the value of a debit account, we debit the account by the equivalent amount. So discount allowed is going to be debited by $712, and against this we are going to credit suspense account by $712, since we have no other account to credit against the debit entry that we have made. And with this we can establish that this is an error that does have an impact on the agreement of the trial balance. The narration for this error is going to be discount allowed undercast by $712, now corrected. Moving on to the next transaction, which says on June 22, both carriage inward and carriage outward account had been overvalued by $45 and $70 respectively. Carriage inward and carriage outward, both of them have been overvalued. Carriage inward and carriage outward, both of them are expenses. One relates to purchase, another relates to revenue or sales, but both of these are debit items. And these accounts have been overvalued, which means we need to reduce the value of these two accounts. So in order to reduce the value of these two accounts, which are debit accounts, we need to do the complete opposite, which is the credit. So we need to credit these two accounts in order to offset the undervaluation that we have made. So both of these accounts are going to be credited. So we are going to credit carriage inward account by 45 and also carriage outward account by 70. Against this, the debit entry is going to be the total of both amounts and suspense account on the debit side. So suspense account will be debited by $115, since we have no other account to debit against these two credit entries. And we have now also established, just like the previous error, that this is also an error which affects the agreement of the trial balance. The narration is going to be carriage inward and outward account overcast, now corrected. Moving on to the next one, on June 28, $750 of commission received was debited to the sales account. We have received commission of $70, which means we have received an income. So notice carefully that commission received of $750 means we have received an income, and income is a credit item. So we were supposed to credit commission received by $750. But instead of that, we have debited the sales account. Sales account is not even a part of this transaction. So in order to correct this error, we have to make two steps. First, we need to credit commission received. And second, we need to omit the debit entry that we made in the sales account, which we can do by crediting the sales account, the exact opposite of the entry that we have made by mistake. So we are going to credit revenue account by $750 since we have debited this account by mistake. And we are also going to credit commission account since we have received an income as commission by $750, and income is a credit item. So commission received was supposed to be credited. And since both of these entries have taken place in the credit side, we have to enter suspense on the debit side, and the value is going to be the total of that in the credit side. The narration is going to be commission received entered in revenue account, now corrected. And with this transaction, we have corrected all the errors using journal entries. Now it is time to prepare the suspense account for those entries where suspense account was included. So we have 5 transactions here where there have been errors, different type of errors. For example, errors that affected the trial balance and errors that did not affect the trial balance. Now, out of these 5 errors, these 3 errors included suspense account, which means these 3 errors had an impact on the trial balance. So we need to prepare suspense account for these 3 errors. So these are the journal entries that we had entered in order to correct the errors, and all these 3 have involvement of suspense account. So we are going to start with the first one. Discount allowed account was debited and suspense account was credited. In order to understand on which side of the suspense account the entry is going to be included, we have to see whether suspense account was debited or credited. In this case, suspense account was credited, so this transaction is going to be recorded on the credit side of suspense account with the name of the opposite account. In this case, the name of the opposite account is discount allowed account. So we have the transaction which we are going to enter on the credit side. The name of the account is going to be discount allowed account. The value is going to be $712. For the next one, we have suspense account on the debit side, which means the transaction is going to be recorded on the debit side of suspense account. And the accounts that we are going to enter are carriage inward account and carriage outward account. Since these 2 accounts are on the opposite side of suspense account, the values are going to be 45 and 70 respectively for these 2. So we have entered these 2 on the debit side of the suspense account. For the last one, suspense account was debited. So we are going to enter the credit items on the debit side of suspense account. Commission received of $750 and revenue account of $750. Both of these items will be entered on the debit side of the suspense account. And with this, we are done entering the items on the suspense account. It is time for us to balance the suspense account in order to find our balance BD and know which side of the suspense account or which side of the trial balance was actually deficient and by how much. So the total of the bigger side, which is I think is the debit side, is 1615, and the credit side is actually 712. So the balance BD is going to come on the debit side of the suspense account. The difference is 1615 minus 712, which is 903. So we have balance BD of 903 on the credit side of suspense account, which establishes that the credit side of the trial balance was deficient by $903. So we are done with our practice sum and we have tested our understanding of the overall lecture. Throughout this lecture, we have learned the difference between the errors that do not affect the trial balance, which are of 7 types. And we have also learned about errors that affect the trial balance and how to correct them using suspense account and journal entries. And we have practiced a sum in order to test our understanding and strengthen our knowledge about this lecture. And we are done about this lecture, and we hope that it was very helpful for all of you who are watching this. Thank you very much for watching.